Okay, good afternoon. Welcome to the weekly take on the market. Today is Friday, December 13th. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here, Investors Business Daily. Please take a moment to read the disclaimer. The webinars, these videos, they are vetted for compliance. So I can speak a lot more freely on a webinar, on IBD Live, on this video than I can via phone, via email, via chat, via pigeon, via carrier pigeon. So I get a lot of emails with questions, and honestly, just most of the time, I just cannot answer them in that medium. So please don't take it personal if you get kind of a standard compliance email from us. But it's important that for me, honestly, it's super important I protect that because one of the great perks of working at IBD is being able to trade my family money, my personal money under that umbrella, and I am all in. I'm in there with you guys, buying and selling stocks wholeheartedly. So I just don't want to lose that privilege. So thank you. All right. That being said, market indices, stocks to watch, industry groups, not in that order. I jumbled that. Quote of the week. So let's start with I think I only have one slide, maybe two. And, I've talked a lot about this and shown some slides on this, the divergence of the US versus the rest of the world. And you can see that the total return of the US indexes in the last 15 years versus the rest of the world stomping their guts out. But a lot of it is, look at the earnings. So the earnings for the rest of the world are stagnant, just barely peaking above maybe 2012 highs. And look at the earnings on a US level. So I would say in hindsight, justified, for lack of a better term. Now, some people out there will say that this, what their famous saying on Wall Street, it can't go on forever, won't. And so it won't go on forever. But if you, in 2017, 2018, 2019, forget about the kind of the COVID blip that happened everywhere. But you could have said the same thing. There's a divergence. It's got to end. And it didn't. It's gone on from 21, 22, 23, and all the way through 24. So could it go on for 25? Absolutely, it could. But what I would say is just be flexible and be prepared that it's been a good market. It's been a really good market for some stocks. And as long as you have a plan, I think you're in business if you have a plan, one, and two, follow that plan, regardless of what you own and how you're positioned. You should have just some kind of game plan for protecting the downside, whether that's, like I talked about, like an equity curve is something I use. I look for sharp breaks in my equity curve. If I have a really bad day in the market, I tend to pretty much get out. Like if I get hit pretty hard, I'll get out 80, 90, even 100% and just reevaluate the next day. That way it's hard for the market to get me 2-3 days in a row. I can have a bad day, but it's hard to have 2, 3, 4, 5 bad days in a row because those can really compound on themselves. And most of the time you get out and you're sorry you didn't, but there are times where I'm glad I protected myself in that regard. Sorry, I got distracted. My cell phone rang. Okay, let's pull up the indices. And I'll turn off my camera. All right, so here is we'll start with the NASDAQ, obviously, and acting super well. A short of this divergence, which I've talked about, which is it's getting closed fairly fast. The NASDAQ last few days, especially, has been outperforming. I think today, like maybe the Dow was, I don't really watch the Dow that much, but the Dow was down, the S&P was flat or something, and the NASDAQ was up. So you're getting, the Avago, the Broadcom / Avago news helped for sure. So this looks fine. Is there anything wrong? No. You're looking for it to go down. You're just kind of guessing. It hasn't even, it's above all the moving averages here. The 10, the 21, the 50, the 200 day. So uh, it's acting fine if you evaluate the indexes. Now, I tend to go the opposite way. I look at them just because people ask about them. They ask about it on IB Live. They, in the video here, we have a whole section on the indices, and I understand the importance of them. But like I've said before, they tend to throw me some curveballs, so I don't put as much weight in them as I might have 10, 12, 15, 18 years ago when the indexes were all the rage. Right or wrong, I just have this at this very moment in time. It's been going on for years. The money never really, in my humble opinion, it never leaves the market. It just goes from the Nvidias of the world to the XYZs to the ABCs. And so imagine Avago was up like 20% today, which is a big move for a stock that size. And I don't know what the weighting is in the S&P, but let's say Avago moved the S&P 1% today. Well, that money came out of, let's pretend, 10 other names, and combined those 10 other names moved the S&P down 1%. So the S&P was flat, whereas you had this really big move in that stock if you had that stock. And that kind of seems to be occurring over and over. At least it's kind of the way I see it. So the Nasdaq's fine. The S&P is fine. If I pull up the SPY, I don't know if I think I did talk about, you've got this kind of channel or, megaphone type thing that's going on here, and it's closing. It's getting closer and closer. I actually had one drawn like this, which triggered today for me. So I actually had one a little bit tighter. It's probably better like this, but you get the idea. And I think it will get resolved one way or the other. And if it does, it could be a big move. If it resolves itself one way or the other like that, it could be potentially a big move, like maybe either blow off like or end of the rally, time for a reset. So the S&P is kind of it right there. I watch this. I have these lines drawn just because I want to see that signal when it occurs. Nasdaq I looked at. IWM. I guess we could pull up the Dow too. IWM. See, it just kind of what this does. I saw a tweet today. I think it was a tweet where a guy said, yeah, buy small cap stocks, just don't buy the small cap index. And I couldn't agree more. I think the index is terrible. It's flawed. The way it if you XYZ is in the index, the better XYZ gets, the more likely it is to move out of the index. They water their weeds and cut their flowers, versus the S&P and Nasdaq do the opposite. So I wouldn't, I don't say never, but I can't remember the last time I've been in this index. But small cap stocks, I have no problem. If you see something smaller and that, I trade small stocks a lot. I have no problem with that size. And I guess we could look at the Dow. Let's look at the diamonds. I think it's down 1, 2, 3. What's that? 9 days in a row. Now it's not a lot percentage wise, but you kind of see like that concept, right? The money's coming out of the Dow and it goes into the Nasdaq, and maybe next week it'll go in the Dow will go up, and then the Nasdaq will go down, and then in the end the market went kind of really went nowhere. So the Dow looks a little bit weak, like the relative strength is as low. The last time the RS was this low, the Dow was what's that, 2,000 points, 20 points on the diamonds. I don't know the equivalency, I'm assuming. So kind of a weak sister. I think that should do it for the indexes. Do we want to look at gold? Do we want to look put these in the index field, I guess? So poked its head back above the line and got slammed today. Not a good day, but still just kind of holding up here, but it's got kind of a bearish, very short-term minor bear flag. And then I guess we can look at Bitcoin. I don't know if I'd put that in the index field, but gosh, that just sure looks strong. That looks strong. I wish that was XYZ Pharmaceuticals with earnings up 37% last quarter or whatever. I'd buy that. That looks really strong. It just feels a little exuberant to me, the Bitcoin thing with the, and I could name 25 stories that I've read, whether it's the guy that ate the $6 million banana was a Bitcoin guy, or Fartcoin has a market cap greater than 48% of the Russell 5000 or something. It's just like I see these things and just the old guy in me just says that this is a speculative bonanza, and no thank you. Now, I don't want to short it either because it's a speculative bonanza and you just don't know where it's going to end. It's a lot like guys that recognize the bubble in 2000. A lot of them recognized it in 99 and 98, 97. And so they recognized it, but didn't do them any good as long as if they tried to short it. So I just leave it be here. Um, 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 okay, Bitcoin. All right. So let's go to the industry groups. Let's go ahead and rank it. Telecom, fiber optics is 1, infrastructure 2, computer software, education, media is 3, transportation, airline. What else is out there? Oil, gas, royalty, trust, banks, Northeast, finance, specialty, transportation, airlines. Interesting. Have you seen UAL? UAL is just crazy. I think look at the move that this made. Really amazing move. Security software. So I don't really, again, I don't know whether it's me or whether it's the groups, but I just have not been able to get a lot of good signals from the groups lately. But I wouldn't give up on that. That'll, as soon as you stop doing that work, it'll come back. So I just kind of go through them, find a group that's moving, like transportation, airlines, 181, 19, 4. Like, but see, this is one of the things you got to kind of grab it from, not that I would have bought UAL, but the time to consider UAL was like right here. And admittedly, I would not have bought it as airline or as sales that are all that exciting. But that would have been the time when the group was going from 181 to 121 to 91 to 40, and that type of order. So that's the value add of looking at those groups week by week. All right, so let's talk about stocks, and I want to start with the FANG index. So look how it's acting so well, and it looked like this morning they were going to get it. Like you had like a little bit of a reversal, but Avago caught itself and dragged everything kicking, screaming. I am surprised that Tesla is not in this index anymore, or it never was. I could have sworn it used to be in the the FANG U index. This one, the triple one, it's not a component of it. They took it out. I guess they took it out as it was doing this, or I don't know. I'll have to look, but Tesla's not in there. I was a little surprised. But so it's CrowdStrike, and they're all around 10%. There's 10 names they make up. I'll make up about 10%. So this one is one, Avago, which had amazing day today, especially from you consider the market cap size of this company. Look at those earnings. Just knocked it out of the park. 28%, 51% revenue. Look at the revenues are increasing. So a great quarter for them. ServiceNow, one day off the high, basically acting great. Meta. So this is where, right when you thought that they were tired, and admittedly that was me, they've caught this group and jammed it. Everything except in Google broke out, probably needs a little bit of time. I would say everything but Nvidia is above the 50-day. I think this is the only stock that's below the 50-day. Was CrowdStrike? Yeah, I think if I saw, yeah, I think Nvidia is hard to believe, but the only one that's below the 50 days. So the whole group is acting really, really well. Oh, I think I'm missing one. 1, 2, 3, 4. Well, I know Netflix, I think, is in this as well. Netflix. So another powerhouse. So it's big, it's liquid. That's where the money gravitates to, acting super well. The other leaders that aren't, like these that have acronyms yet, app. So it didn't get added to the S&P, kind of got hit on that news. I would have guessed that if there wasn't kind of that rumor, that feeling that it would get added to the S&P, probably would have stopped right there anyways. You wouldn't have had this little extra boost. So it's not really doing anything super wrong, but it definitely needs time if you own it. Reddit, time if you own it, acting really well. Palantir, wow. See, so like these look, I would have thought that they would have given back more of the gains they just don't. They just don't want to give back gains. So those are three names acting super well that a lot of you probably own. Kava is not, that probably needed or should be sold. It's, you just sell it and you just wait for a new base if you love the name. Yeah, if you own it down here, it just depends on kind of your style. But this looks tired at best. Uber is very interesting. I don't want to read too much into Uber, but like here's that really strong. I think this was in anticipation of some kind of news, or the news is there, and they had a pretty good quarter, right? Earnings up 999%, and stock's gone nothing but down, acting terrible. RS is 19, so that looks pretty tired. I think I am no, I don't have Uber. I am short XLI, which is an ETF that does have Uber. So this is, I'm not going to get rich here, but I'm not going to get run over either, which is why I kind of like being short something like this. But so I'm not short Uber, but Uber is in the XLI for disclosure purposes. Nvidia, I am short Nvidia with synthetic, with one of the levered ETFs. That's kind of how I like to play them. If I'm short the Nvidia long one, if it goes sideways for months and months, I should be fine. If not, make some money. And if it goes down, should be fine as well. I'll get hurt if it goes up, but I'd get hurt if it went up and I was short the stock. So I find this, I just can't kind of wrap my head around the short-term weakness in Nvidia, as the market has acted so well, the relative strength. But I think I want you to guess what you think the 3-month RS rating is on Nvidia before you look. Just kind of think, what do you think the 3-month RS rating is? How is, in the last 3 months, how is Nvidia acting versus the rest of the database? Roughly here, right? And drum roll, please. Technical folder, 3-month RS is 53. So half the database basically is acting better than Nvidia in the last 3 months. That's kind of interesting. The 6-month RS is 75. So 6-month is, from here to here. So short term, not all that great for this stock. Now, it is Nvidia. They're a powerhouse, have the best earnings and sales, institutional quality. So I might be reading too much into it. A lot of you that listen to this video probably own Nvidia. I don't blame you for owning that. If you own it here, I would guess you have it either here, or hopefully, here or something, and you have some kind of cushion that you can, if you own it here, coming out of this space, I think you should have got out. If not there, today. We'll see. What else? Oh, newer RBRK. holding up pretty good. Nice little gap up on earnings. MSTR, right? We don't. This is Bitcoin related. Uh, I don't know. This looks toppy to me, like very SMCI like, but I would have thought the same thing there. And then SMCI made another new high. So, like, if you'd asked me here, I'd say, yeah, that's topped. And boom, makes another new high. If you happen to short it, you got run over. So, can SMCI make another new high? I'm sorry, MSTR. Yes, it can. Is it going to? I don't think so, but boy, I don't know. The stock's already done way better than I would have anticipated anyway. So I would have thought here was the top. Like literally, I mean, the stock corrected 50%. And if you go to a monthly and you pull up after the 50% correction, um, like in March of this year, oh, before that happened, geez, wow. So, I mean, this looks like, made a big move, almost what, eightfold move, and then gives it all back. Normally, that's over. That's game over. They don't come back from that. So, this stock kind of it's just in the sweetest of sweet spots, the Bitcoin area. Oh, MSTR. Uh, I know I mentioned Tesla, but I don't think I pulled up the chart. Credible strength, just defying all odds. All-time high. All-time high. Everyone who held, I don't know how Charles, I would love to hear Charles' story on this because I know he was trying to hold for this. He really felt this was going to happen. Hopefully he has at least some of it. I know he's talked about he couldn't handle all of it. Charles Harris, the portfolio manager at O'Neill, but he was right. I would have bet if he had asked me, I'd have said, yeah, I'll bet you it will never make another new high like that. It never reached 400. That's what I would have bet, and I would have lost. Um, okay, and then we don't talk about financials too much, but Blackstone acting great, Apollo, APO. So I had that. I don't know why I kind of had that weird day, but if you can it's kind of such a weird day that I almost ignore it. So it's acting fine. Um, is it Stiefel and Jeffries? I think it's JEF. So that even that this whole financial area is holding up really well. So it's a bull market. It'll end when it ends. Have a plan. Uh, I think if like a lot like what Bill would say, you just one of my favorite things Scott said about his dad. He said when they'd ask him about the markets, he'd say, "I don't know. I come in every day, sit down at my desk, and I just watch." And I think that's 89% of it. Like you just doing that ought to keep you out of trouble because you're just observing. Are prices acting correctly? Are they acting abnormally? Uh, Today the market opened really strong, tried to go down and couldn't. So that's a tell. It looked like to me the market was going to go down, and right when I thought that the market was going to go down, it stopped going down. So those are little things that I try to observe. And one of these times, though, it looks like it's going to go down. It'll go down. It'll stay down. It'll go down the next day and stay down, and then you'll be like, "Whoa, I think something's changed," and then adjust accordingly. I think I can turn my camera back on. I'm gonna go to the quote of the day. So not a whole lot of meat on the bone in the markets. And as we get near the end, it's December 13th. I think I got one more video. I'll probably do one on the 20th, and that will be that as the market kind of winds down. And I know somebody asked me about the divergences. So I told them I would talk about this on the video, and so let me get to that. And I think I might have mentioned a little bit of it, but you've got a divergence is where one indicator or one index is making a new high or a new low, and the other one is not following suit. So you could have a negative divergence or a positive divergence. So a negative divergence would be this. The NASDAQ price is making a new high, but the relative strength line isn't. Or let's say the Dow makes a new low and undercuts this 416 low right here. But the S&P, like what low is that? That's November 1st. But the S&P in that same thing stops here. Does not undercut that low. Or the NASDAQ or the QQQ, let's go NASDAQ, low broader, stops here, doesn't undercut that low. That would be a positive divergence, right? The major indexes that we follow did not undercut those lows. A negative divergence would be if they did. So if the S&P were to undercut these lows, and the NASDAQ were to undercut the low, but the Dow didn't, I would put more weight in those indexes. So it's kind of a back and forth. But I just, the only divergence I see currently is this RS line, and it's not super telling. It's catching up. And so, but it hasn't made a new high. So if it doesn't make a new high, it's very, very close. You can barely see there's some white in there. So if the market were to roll over and this were to start to go down, then that would be kind of a confirmation of the negative divergence. And so that would be a stronger signal if that were to happen in the way I trade, right or wrong. And then some people asked about like the end of the year stuff. I can talk, maybe I'll talk about the pros and cons in a slide next week, but basically I tend to almost, especially for my taxable accounts, I just go to cash at the end of the year, and it's more just easier to figure out how much I made or lost. I have had a couple of losing years in taxable accounts in my trading career, but it's just so much easier if X became Y, and I know I made X amount of dollars, and you get these big stacks of all the trades you did with your broker, and they've made mistakes before, and so it's hard to reconcile all those trades together. So that's one of the reasons. And I can talk about the pros and cons and kind of how I do that next video, like why I go to cash. And also I like to go to cash just to start fresh. I just want to start from 0 percentage wise. I know my account is here, and boom, 2025. I don't care if I made 50% or lost 20% in 2024. I'm right at 0, and I proceed accordingly. All right, so the quote of the week, Michael Burry. He was Christian Bale in the Big Short movie. But it says, a tenet of my investment style on the subject of common stock investment, maximizing the upside means first and foremost minimizing the downside. The deleterious effect of permanent capital loss on portfolio returns cannot be overstated. The math is cruel to the downside. If you lose 10%, you got to make 11% to get even. If you lose 25%, you got to make 33% to get even. And if you make 50%, you got to double that same amount of money to get even. So you have to protect that downside. It just works. I don't know why it does. Mysteriously, it's just way worse the other way. And I'm a big proponent of that. Just trying to protect. See, you're always kind of within shouting distance or shooting distance, or you can overcome a 10% hole. I think to make 11% in a good rally is not that difficult, but it also will weigh on you too if you let it go down too much. And that means I don't care how much you make. If you make 300%, if you turn 100 into 300, and you let it go down 50%, think about the math. How you turn 100 into 150. So you just give back so much as you go up, And also the amount of money will affect you as well. I can tell you that from personal experience is sometimes I just both ways, like, I just panic because of the amount of money I'm up, down, and I panic and the amount of money I might be up. It's like, wow, that's a lot of money. I should take that and just get out just for no reason. Just sell it just because it's a lot of money. And even though the stock hasn't done anything wrong, hasn't given me any sell signal, it's done nothing. But I just see that amount of money and think and just kind of react to that. So you keep that in mind too when you're when you're considering your protection mode. All right. Thanks, everyone. We will see you next week. 800-831-2525, market surge at investors.com. Thanks. Bye-bye.